Hello and you're very welcome to this video in our series on final accounts for junior cycle business. Now, in this video we're going to be looking at is the trading account part of the income statement, so the very beginning bit. The question we're using is from Edco's Time for Business second edition. The question is question 15 on their student activity book, which is on page 281 and 282. Let's get stuck into the question. We're told from the information provided, complete an income statement for Cullen Limited for the year ended 28th of February 2022. And we're told there's sales there of 512,500, purchases, carriage inwards, customs duty, opening stock and closing stock. So let's put that into the little table provided to us. Now, as you can see, there's 3 columns here, as you would find in record book 2. Generally speaking, the right hand column is usually your total of total columns, okay? And this is where we're doing our first little working, so to speak, and an inner working if required. We're not going to need this column here today. But as we go on, you'll see that we are going to use that column when we get to the statement of financial position. The first thing that we always put in at the top here is our sales. And as you can see yourself in the question, we're told we have a sales figure there of 512,500. We've nothing to do with the sales figure straight off the bat. We don't have to take anything away or add it. So I'm putting it straight into my right hand column here. Now, sales is what we sell. Okay, so it's the money we get in from what we sell. Now we have to take away the cost of sales. So put a little heading here saying less cost of sales. In other words, we're going to take away any money I had to spend in order to make these sales happen. So money I spent directly related to this sales. Of course, the first thing we're going to have is opening stock, which is given to us here as 9,570. So I'm going to write in here opening stock. Opening stock, remember, is the goods that we had at the start of the year that was left over from last year that we didn't sell last year. Opening stock. Now we're going to have to be adding up a few different figures here. So I'm not going to put this straight into my right hand column here. I'm going to put it here in the second column here instead. My opening stock figure there is given to us as 9,570. Next up here, I'm going to add in my purchases. Purchases given to us here in the question as 359,300. So let's add that in. Purchases are the stock or the goods that a business buys with the aim of reselling it on to consumers. So it's not for their own use. Now, is there anything else we have to add in here? There is indeed. The question gives us carriage inwards. Now, carriage is a fancy way of saying delivery. Think about, the old horse and carriages back in the day. So whenever I see carriage, I'm thinking delivery. Now, carriage inwards means the delivery into the business. So delivery of goods into the business. So I'm going to put this here, 5,500. Happy days. Anything else I'm to include in there? Yes. Customs duty is there as well. So I have customs duties to pay of 6,370. Customs duties, also known as import duties, are taxes that we pay on goods that we import or bring into the country from abroad that is not from the European Union. We don't pay customs duties in the European Union because we have a free trade area, but more on that on the videos on the European Union and international trade. Now at this stage, let's check off. So I've done sales, I've done purchases, I've done carriage in, and it's good practice to get in the habit of ticking off what you've put in each time. And I've done opening stock. So the only thing I've left there is closing stock. And we're not going to deal with that yet. We don't add on to that. Now I get my calculator and I'm going to add up these 4 figures here. That total is 380,740. The thing is, was all this sold in this particular year? No. Every year there's going to be stock left over that you didn't sell that you're going to sell next year, and that's what we call our closing stock. It will become part of next year's accounts. So I'm going to take away my 13,920 there. 380,740 take away 13,920 is going to give me a total of 366,820. That figure is what we call our cost of sales or our cost of goods sold, either or. The reason why I put it out into the right hand column is because it's a total. Now I'm going to have to do something with this figure here and this figure here in order to get my total down here. So, question is, what do I do? Well, think about it logically. I've my sales there, what I've sold. I've the cost of what those sales are. And my next line is going to find out what my gross profit is. So am I going to add them together or take them away? You're right, I'm going to take them away. Well, I hope you're right. And I'm going to get a total of 145,680. And that is what I call my gross profit. So if we think about it logically, we've got our sales figure here. We take away the figures that we have to add together in order to make those sales to happen. And then we take away the stuff that doesn't relate to this particular accounting year, but is going to relate to a future year. We then take our sales away from what our cost of sales are going to be, or from what we spent the money on, to find out what our gross profit is altogether. And don't forget, of course, to give a tick to make sure you have everything ticked off the list. So, hope you enjoyed this video. If you have any questions, please ask below in the comments. If you enjoyed it, give it a like, and why not subscribe to the channel. Thanks very much for watching. See you in the next video. Bye now.